Hello, trading is closed on June 17th, 2022. We always start with our disclaimer. It's my trading plan for Tuesday. The market's closed Monday. Tuesday, June 21st. Remember, I can be completely wrong, and any trade you make should be at your own risk. Please follow the rules of my channel. We had mixed signals today. The commonest thing was a gap and prompt move outside the day's range. We got that. We actually traded under that low pretty quickly. Next most common is a closed little change. I define little change as 1/4% or less, so 0.22%. We got that as well. It's a reminder of what we said. These are the patterns I'm looking for next week. We had this big drop in the morning. MEJT said it was false. The price would retrace all the way to this yellow line, which is what they did. We've now officially printed a weekly bar under last week's bar with a gap. It's a major break of support. Just because you're oversold like this doesn't mean you won't get more oversold. I've seen many people calling bottoms right here because we're so oversold. You can be certain if it is a bottom, no one's going to be calling it. We have the same pattern we showed before. To me, when I see prices close little changed, I just repeat the prediction I had from the previous day. If we gap under this line, that hasn't happened yet, but if we gap under it, all the elements for a crash are there. We have the date, which has a few days leeway, but we have the wave count, and we have break of support, and we have sentiment figures which are showing overwhelming bearishness in an oversold market. That's when crashes happen. A 38.2% retrace of this rally would give us 32.62. We have wave balance at essentially the same price, 32.2936. My rule says when you have this down trend line that's this steep, you break through in a straight line, you should return to the trend line. If that happens on Tuesday, it'll take us to where, 35.57? That's more than 100 handles under where we are now. This is how I'm counting it. Maybe someone else has a count that works. That's fine by me, but if that's a bottoming formation, it's one that I don't recognize. Of course, as always, gapping up smartly kills the idea. You could certainly call this an inverted diamond on stilts. If we gap up here, well, let's kill before the open. But to me, it's an impulse down. We've had 2 days. We haven't been able to close over any of these highs. That's not much of a recovery. Yesterday's pattern was quite negative. It should pay off with a big drop, and we haven't hit with a drop, and I don't know if that's enough yet. So this doesn't look too healthy to me. Tuesday's pattern has the early low. It could still gap up. Thursday's normally strong pattern wasn't. Should lead to more weakness in a day like today with price little change, usually just delays the inevitable. The wave count remains compatible with the third leg down a multiple degree, and if we gap down smartly, elements for a crash are there. Doesn't mean we'll have a crash, but these are the conditions in which crashes can happen. Still looks negative to me. If we gap up smartly, then the call's killed before the open. Otherwise, when the market reopens Tuesday, I'm looking for lower prices, and that's today's call.